Third quarter results out from General Motors. Phil LeBeau joins us now with more. Hey, Phil.
Hey, Joe, take a look at shares of General Motors moving up substantially as the company beat on the top and the bottom line, and it also raised its guidance for the full year for Q4. First, in terms of Q3 results, EPS of $2.80 a share, well above the estimate of $2.31. Automotive revenue, or revenue overall, $48.59 billion. The street was expecting $45.27 billion. But you do see the impact that tariffs had relative to last year when you look at the metrics within the quarter. EBIT adjusted for Q3, $3.38 billion versus $4.12 billion last year. Q3 EBIT adjusted margin of 6.9% versus 8.4% last year. Auto free cash flow, $4.2 billion versus $5.8 billion in North America. EBIT adjusted of $2.51 billion. Last year, they earned $3.98 billion with a margin of 6.2% for the third quarter of this year versus 9.7% for Q3 of last year. That's the tariff impact there. In terms of the impact, the results in North America, international EBIT adjusted $226 million, a nice beat compared to last year of $42 million. China income has swung positive, $80 million there in terms of Q3 profit versus $137 million loss in the third quarter of last year. But the guidance is also the factor here for the stock moving higher. EBIT adjusted for the fourth quarter, $9.75 to $10.50. Previously, GM's guidance was $8.25 to $10. EBIT adjusted guide for the fourth quarter, $12 to $13 billion versus $10 billion to $12.5 billion. That was the previous guidance. And for the fourth quarter, auto free cash flow, the guidance is now $10 to $11 billion. Previously, they expected free cash flow from the auto business of $7.5 to $10 billion. And they also are lowering the expected impact of tariffs for 2025 to $3.5 billion to $4.5 billion. Previously, they thought it would be $4 to $5 billion. They're able to offset about 30% of the, or 35% of the tariff impact. Lots to discuss with Paul Jacobson, CFO of General Motors. He's going to be joining us in about 15 minutes, guys. But again, a beat on the top and the bottom line, and that guidance, that's the reason the stock's moving higher. Despite the impact of tariffs, they are raising their guidance for the full year.
I'm trying to figure out, maybe Sorkin, you probably know too, Phil. So we can't compare stock prices prior to 2008 and 2009, right?
We can't.
I don't think so. Because I'm looking at this.
No,
would be,
you can't, Joe. They went through bankruptcy.
That's what I mean.
It's
so
not
this
really
is as high as it's. I think this is as high as it's been post financial crisis,
close.
or close to it.
Right.
So do you call that an all-time high?
Yeah, it's close to an all-time high for them.
Well, do we call it an all-time high?
But Joe, also.
Yeah, go ahead.
I don't know what the all-time high is. Somewhere in that $60 to $70 range.
62, 60. Let me see.
Yeah.
But 55. It's amazing because it's only a $60 billion market cap or so. Back in the heyday, was the market cap ever over? I don't know if it was ever over.
Oh, it was substantially higher than that back in
higher than 70 or 80 billion back in the heyday.
I believe so. If you're going back to the late 90s. I think it was. I don't know for sure, Joe. But, you know, the GM investors, they're going to love seeing this, guys. But keep in mind, this is a stock that went public at $33 a share. So it really hasn't done a whole lot since the IPO of the new GM.